Hello and welcome to Your Stocks on CNBC-TV18. I am Hormuz Fatakia. The markets are staging a swift recovery from the lows of the day as the MSCI flows start to kick in towards the final 90 minutes of the trading session. The Nifty is back at 22,600 but still down for the week. But the bulls would look to end the week on a high ahead of the exit poll results tomorrow and the election results on Tuesday. The Nifty Bank also staging a bit of a recovery from the lows of the day as we speak. But let's get to our guests. Joining us today, Shahina Mukadam, independent market expert, and Vaishali Parekh, head of technical research at Prabhudas, Lilladher, to answer all of your queries. Ladies, good afternoon. Thanks a lot for joining in. We'll start off with the first query of the day, and Jessie is writing to us from Bangalore, and she wants to know if she can invest in the renewable energy financier IREDA right now. And I guess that is a question that everybody wants to know, whether they can invest in IREDA. Shahina, I'd start off with you first. It's been a wild ride that IREDA has had. 32 rupee listing price within a few days goes up to 200, then corrects to 100, now back at 180. Should this level quantify as an investment opportunity for the viewer?
Well, I think even at current levels, it's quite expensive. So, in fact, if an investor wants to buy, I think they should wait for some further corrections. Given the fact that, there are a number of policy decisions that RBI has taken, which will increase the provisions that NBFCs will have to take, which includes this company. At the same time, it may not affect profits that much, but I think in terms of overall valuation, it still remains expensive.
Vaishali, Shahina said you should wait for a correction if you want to buy into the stock. Does the chart indicate such a correction? Because you haven't seen many in IREDA.
Hi, very good afternoon. So that precisely implies the inherent strength. So I would say, well, we don't have much of a data because it's comparatively a new stock. But I think the way the stock has surged and now pretty much consolidating, in the range of 150 to 180, I would rather say, do not miss the chance of buying. I would say rather start accumulating if there is any dip, because technically I would say there is a very strong support of 155. So I would say accumulate this stock because right now it's in a very strong grip.
Is there an upside target on the chart that you anticipate, Vaishali?
Well, so I would say the near-term target resistance that I would look at from 155 to 195, that would be the hurdle. And above that, it would be ready for a target of 220 to 230 to start.
Right. All right. We'll move on to our next query now. And Rahul Kulkarni is writing to us from Pune. He holds 10 shares of Petronet LNG at 200 rupees. And he wants to know the prospects of his investment. He's very much in the money, Shahina. Petronet LNG is a quiet mover, not the kind of stock that you frequently talk about. It's up 30% already this year. What should this gentleman do with his investment?
Well, I suggest he can continue to hold because we've seen crude oil prices are remaining pretty firm, and that actually is a benefit in a sense to Petronet LNG. So I would think that given that they have expanded their facilities, they're operating at good capacity in the Dahej, I would say that it is a hold. One needs to keep a track actually and watch as to what future investments the company makes and whether it is aligned with the investors' portfolio decisions. So one keep a watch, but at the same time hold at current levels. You can keep a stop loss. 275 would be a good stop loss.
What about the charts, Vaishali? It made a 52-week high of 323 as Petronet LNG. Does the chart have the strength to reclaim those levels and move further higher beyond that?
So, well, it depends on what the time horizon is because as Shahina said, the long-term chart, if I'm looking at the weekly chart, the trend is pretty strong and we have a good support band at 265, 270. So if that is a long-term horizon, I would look at it that way. But if it's just for a short-term trading perspective, then 290 would be the near-term support. If that breaks, then we would be heading towards 280, so on. So that is how I would plan to trade in this stock.
Interesting moves there in Petronet LNG is 46% higher in the last 6 months. It's been a quiet mover, but it's returned handsomely so far this year. On to our next query then. Bonnie Jain is writing to us from Mumbai. He holds 6 shares of IGL at 350 rupees. Now he wants to know whether he can add more shares. Vaishali, what are the charts indicating here in IGL? It's been a bit of an underperformer when you compare it to MGL on a 12-month time frame. What do you suggest on the charts?
Well, so there is no clear trend right now in the stock. So I would say if he has to add, 440 should be taken as the support. And I think this is where he should add and look for a trading target of 480. Further conviction comes only above 480. So 440 to 480 would be the band that I would be looking at. So this is a good appropriate level to get.
440 to 480 is the band that Vaishali is looking at. What about you, Shahina? As I mentioned, it's been an underperformer in comparison to MGL. So should he add more on to these investments, or is MGL a better investment opportunity?
Well, yes, I would actually avoid the sector as of now. I would agree with Vaishali that we should not accumulate it at current levels. Wait for dips, if at all you want to add, because while the balance sheet is pretty strong for the company, of course, and it's a PSU holding. At the same time, if you see, the government has actually now, they have reduced the domestic allocation of gas, which has actually resulted in an overall increase in the cost of the raw material cost for the company. They're not able to fully pass it on. So it is going to affect the margins, profitability for some time more to go. So I would suggest that the investor wait, and then you can relook at it at declines.
Right, the city gas distribution space, Shahina would want to avoid this space as a whole as of now. Moving on then, Rajesh Kumar is now writing to us from New Delhi. He's holding 10 shares of Bandhan Bank at 150 rupees. He wants to know if he can buy more shares as well. Now, Shahina, Bandhan Bank has been the worst performer on the Nifty Bank Index in 2024 so far. It's down over 20%, but this gentleman is still in the money as of now. What would you recommend to him? Should he add more to his positions?
No, I don't recommend adding more. It's the worst performer in the index, which is in line with its financial performance, which I would say that is one of the worst in the overall segment. And, being largely present in Northeast, West Bengal, they have actually suffered a lot of I would say NPAs, you have had floods over there, you've had overall recovery that is being affected. You see the provisions that they did in the fourth quarter were pretty high. Now, having said that, I think, their NPAs still remain high, and valuations, while at 1.4 times book, is not expensive. I think there are better opportunities available in similar price points, so one should avoid.
The better opportunities available. Would you concur with that, Vaishali? What are the charts for Bandhan Bank indicating?
I definitely agree. Of course, my preference would be an SBI or an HDFC Bank or an Axis. But if one has to, Bandhan, I would look at it, though technically it is quite well placed. So for a trading perspective also, the strength comes only above 192. If it sustains above 192, a trading strategy can be made for a target of 220. So that is how I would look at this stock.
A trading strategy towards 220 is Vaishali's view, but Shahina does not recommend Bandhan Bank and looks for better opportunities in the sector. But moving on then, Subodh Shinde is our next viewer. He's writing to us from Pune. He has 332 shares of Poonawalla Fincorp at an average price of 391. Now, he wants to know whether he should continue holding or he should book profits. Now, the stock, Shahina, has done pretty much nothing so far in 2024, but 2023 was a good year for the stock. Should the gentleman here in question is very much in the money. He's asking whether he should book his profits or hold his positions.
Well, see, the stock has a very strong promoter backing. So if you're going to hold it for the very long term, I think, it is going to make you a reasonable amount of money. Having said that, I think, while the business is growing well, as we saw in the fourth quarter, valuations, if you see currently at about 4.4 times book, is not cheap. In addition to that, you have additional competition that is coming in a big way, from some of the very large players. So I think it would, he can actually continue to hold for the long term, or he can take part profits.
What about you, Vaishali? It's been consolidating in a range, is Poonawalla Fincorp, all through the first 5 months of the year. Is there indications that the stock is poised for a breakout? What are the charts suggesting?
No, there is no scope of a breakout right now. Even if I'm looking at a monthly chart and all, there is some bit of exhaustion seen in this stock. So if 440, 435, that is the level on the near-term basis I'm seeing. If that level is broken, then you can see some further corrective move. Because even while I'm looking at the monthly chart and all, the RSI is showing some exertion. So I think profit booking, partial profit booking should not be ruled out, or else keep a trailing stop loss. If it goes below 440 on close basis, it calls for some weakness.
Stay on, ladies. There are more queries to answer. By the way, the market continues its upward recovery. Now the Nifty is well above 22,600 as we speak. But what is leading the charts are metals. And the metals index, we just spoke about it in the morning. It's been an underperformer this week, but it is seeing some bit of recovery from the lows. There you can see 2.5% higher now is the metals index, is at the highest point of the day. And pull up stocks like Coal India, and those are the ones that is leading the gains. Coal India, incidentally, is the second best performer on the Nifty after Adani Enterprises. They're 2% higher. A sharp move there on Coal India as we speak at the highest point of the day. Pull up some of the MSCI flows related stocks as well. PB Fintech is one of them, and Nuvama was anticipating that PB Fintech, its inclusion in the MSCI index, would bring in the highest potential inflows. It's off the highs of the day. There's a sharp bit of down move that has come in, but PB Fintech is seeing 4%, is up 4% as we speak, and Nuvama is anticipating 283 million worth of inflows. Pull up Sundaram Finance as well. That stock is also likely to see inflows of close to 250 million. Is what the report suggested after the MSCI inclusions were announced. Almost 3% higher there is Sundaram Finance. Pull up NHPC as well. That stock was also trading in the green as earlier in the day, and that is also likely to see inflows of close to 234 million is what was anticipated. 4% higher now, NHPC back above the mark of 100 rupees. And pull up Indus Towers as well, and that stock, every time Vodafone Idea has a good day, Indus Towers also has a good day. But today Indus Towers would be in the news because of the flows that it is likely to receive, slightly off the highs of the day, but 1.5% higher, close to 350 at Indus Towers. It's time for a short break on your stocks. We'll answer more of your queries on the other side with Shahina and Vaishali. Stay tuned. Back soon. Back with us on Your Stocks, and Shahina, Mukadam and Vaishali Parekh are still with us to answer all of your queries. And moving on to the next one, that comes from Alka Murli, who's writing to us from Bangalore, and they have 476 shares of SRF at 356 rupees. Now he wants to know whether to stay invested or book his profits. The profits are pretty significant, Shahina, and the specialty chemicals space as a whole has gone through plenty of pain over the last 12 months, and SRF is no stranger to that. It's not immune from that underperformance as well. What do you advise? Should he book profits on his investments?
Well, he can book part profits. He's making a good amount of profits. He can book part of it because if you see the valuations, it's quite expensive. Currently, if you see, it's about at 20 times EV by EBITDA, which is pretty high for a chemical company. Also, the fourth quarter numbers were quite disappointing. You know, both chemicals as well as their packaging divisions, both didn't do well in terms of expectations. And the chemical business is likely to start recovering only in the second half of FY25. So I believe it will be some time before we start, see the revival of growth coming in a big way for the chemical sector in terms of profitability. So having said that, I think it's a strong company in terms of the overall balance sheet. So if the investor since he has bought it at a low price, he can continue to hold part of it and take part profits.
Strong company, but some more pain ahead for the entire sector is SRF, the specialty chemical space as well. Vaishali, what are the charts indicating? The stock being an underperformer, is there any scope for a recovery there on the charts?
Well, I would say technically 2100. I mean, the stock has really corrected from the recent past of 2700 to currently at 2200. So I would say 2100, 2000 is a very good support band. And from there on, I think we can see a pickup coming in. But well, no harm booking partial profit over here and again getting into the trade at lower levels.
Interesting. Moving on to our next query then, that comes from Harsha Vengala, who's writing to us from Madhya Pradesh, and she holds 1,000 shares of Federal Bank at 55 rupees. Now the question is the future prospects of these investments. Shahina, Federal Bank has been one of the steady performers within the private banking space, but now there is a management change that is imminent there. There is a bit of an overhang that lies on the stock as well. What should this individual do with his investment?
Well, it's got a good balance sheet. The return on assets is about 1.2%. They reported decent numbers in terms of you have stable NIMs. The credit cost was lower, so fourth quarter was reasonably okay. So one can continue to hold for the medium to longer term, given that even price to book is not too expensive for current year. It's about 1.2. So it's one of the interesting small cap mid cap banks, and one can continue to hold.
Vaishali, the stock has been stuck in a range there, 120 on the lower side, 170 on the higher side. It's not moved past that 52-week high of 170 that it hit. Do you see the charts having enough strength to go past 170 now that it's currently at 162?
Well, I won't be able to say much because it's been such a flat stock. There is no momentum, there is no trend. So I would say continue holding if one has to. And I guess, the near-term resistance, as you said, is 170. Let's wait it out.
No trend there on the charts for Federal Bank. The stock also is up just 3.5% on a year-to-date basis. Next up, we have Guru Datta, who's writing to us from Bangalore, and he says he wants to invest in SBI and is asking, is it time to buy some shares? Now, Vaishali, the stock is now at 830. It's moved pretty significantly from the lows that it used to trade at. What are the charts suggesting? Does a long-term chart indicate 4 digits on SBI soon?
I would think so, because compared to all the banks, I think this is one of the banks that has been really outperforming as far as the chartical look is. And I would say, yes, 790 acts as a very good support. So market being a bit choppy right now, I would say keep 790 as your support and start buying the stock, because we'll wait for a confirmation. A close above 835, 840 would give us further conviction for this stock to move above 880 to 900 levels for now. So yes, I think keeping the trend in mind, I would say yes.
Shahina, in one of your answers earlier, you had spoken of SBI, where they started the year at somewhere close to 600, 620. Now it's at 820. Does it still command that multiple to say that, okay, it's SBI, the largest bank in the country, it's at 830. It has moved significantly, but you can still buy it?
Well, I think so. You can still buy it, because if you see in terms of valuation, it's pretty attractive. And on such a high base, if you saw the fourth quarter numbers, they have, shown a very strong growth in profits despite being on a high base. You've had improved financial performance across the board. Names were better. Profits, of course, were higher. Their NPAs are well in control. Their provision, the provision ratio is pretty good. So, valuations are not attractive. So one can continue to buy and you hold. This is one of a stock that you can have in your overall portfolio for the long term.
Interesting. It's SBI, they're the largest lender of the country, an outperformer this year at 830 as of now, almost 50% gains in the last 6 months. Next up, Puneet Saxena is writing to us from Bihar. He's holding 50 shares of Happy Forgings at 1,000 rupees. Now he's asking if he can hold the shares for another 6 months. It's a recent listing, Shahina. What do you recommend? Can he hold those shares for another 6 months?
Well, I don't really track. I mean, I don't have much knowledge of their future potential in terms of numbers. So I'll just pass the answer.
Well, Vaishali, I'm assuming there would not be any significant information on the charts as well. But if you would like to share any key levels for Happy Forgings, it's at 1100 currently.
I would still say yes, because compared to, seeing the overall forging stocks, they have done pretty well. And talking about Happy Forging, I think it has already got into a trend. And I think it's moved past the previous high also. So I think it's holding on very well at these levels, and I think it should continue holding with a stop loss of 10,000 would be a better level to hold with a trailing stop loss. And look for, I think in the price projections that we are looking at is 1,300 to 1,500 from here on. So yes, that is a hold.
1300 to 1500, significant upside still there for Happy Forgings, and 1000 rupees stop loss as well. So a good move there on Happy Forgings, a percent higher, but it's almost gained close to 17% in the last month itself. And moving on now, Praveen Rao is writing to us from Chandigarh, and he's holding 500 shares of Zomato at 150 rupees. Now he wants to know if he can hold those shares for a 3-year time frame. Shahina, 3 years is a pretty long term when it comes to a time horizon, and Zomato has now, with Blinkit turning a bit positive. The commentary that came in from Macquarie today was not very promising. That's reflecting on the stock price, but should this dip be used as an opportunity to buy?
Yeah, absolutely. I think the weakness in the stock that we are seeing currently is due to some of the negative reports. I would say some reports that have come up by broking houses, which actually have brought down their price targets for Zomato. Having said that, I think, if one is holding it for the long term, in my view, it is a concept stock. And if the investor holds it, even at keeping a stop loss of his current buy price, which is around 150, I would say that he should ride it out, because there are a couple of positives. One is, of course, their food delivery business is growing. It grew by about 12%. Blinkit, while you may see some bit of increase in cost, because they are expanding to Gujarat, etc., and other states. But at the same time, they are likely to drive growth for the longer term. And EBITDA is turning profitable. It's turning EBITDA positive next year. So I would suggest that one continues to hold, keep a stop loss.
What about you, Vaishali? 175 right now on Zomato. There are a lot of brokerages that have targets of almost 250, 260 on Zomato. Does the chart have enough strength to get to those levels, say, in the next 6 to 12 months?
I would say so, because actually the stock has done really very well, and I think it's just a breather right now. There's no damage to the trend. The trend gets weakened only below 140. So I would say yes, continue holding. In fact, it can be added also at these levels for the next round of momentum to start.
Shahina, Mukadam, Vaishali Parekh, thanks a lot for sparing time and joining in to answer our viewer queries on this edition of Your Stocks. Thanks a lot for joining in. And with that, it's a wrap on this edition. But do remember to email us your queries and we will address them with our experts all through the week. Stay tuned, because Closing Bell takes you through the final 60 minutes of the week before the all-important exit polls. Back on the other side.